What is going on, everybody, and welcome to another technical analysis video, a video I do weekly to try to provide you guys good entry and exit points with supply and demand. That sounds like something you are interested in. Consider subscribing, as I do also provide essentially a weekly outlook looking at events and earnings in the upcoming week, along with giving you some sort of pulse of the market and understanding of what events can influence the market. And also, I do provide a Pulse of the Market daily at Hemi137 on X. You can check me out there as well. But before we get started, let's go ahead and drop a like and get this technical video going. So, for the past week, we've essentially rallied all the way back to all time highs, which is insane considering that this move was essentially the yen carry trade, which essentially sent us back down to that 51.23. And we have since rallied as essentially the market is getting ready for cuts. Now, I'm going to go ahead and say this now, but we have made a higher low already, so I'm expecting this to potentially break. The question is we've come to this scenario multiple different times over the past several years. Now, when we're essentially toying with all-time highs, if we can't remain above here and get a candle open above here and actually make new to all-time highs, that is concerning going to the back half of the year. Essentially how we started kind of correcting in 2022, with tech having one of the worst years during that year, and we've essentially rallied from that point. But there's a lot of things going on, and I highly suggest that you check out my analysis video as well, because I really get into detail on what's going on with there. But considering that the debt to GDP is 123%, compared to, on average, it's only about 50% on every recession that we've been in. So that should tell you a little something about what's about ready to potentially happen. And now, again, we've been heavily, essentially, the Treasury and the Fed have been heavily manipulating the market to try to keep this thing propped up with no debt ceiling. So with that being said, we have to watch and see what the price action looks like when we start toying with this all-time high. Now, this week we do have NVIDIA earnings. You need to keep that in mind. That's going to have a heavy influence on what this market's going to do. So I wouldn't be surprised if we kind of just hover around here until we get NVIDIA earnings. That may be the make or break for if we can get in price discovery mode again, or if we pull back. That will be very, very interesting to watch and see what's going on here. So roughly right now, again, we're trying to break all-time high. Once we get into that, it'll be price discovery mode. So not expecting a whole lot to continue to push up. Again, you're going to have to be built off of events and momentum to determine how high we can go if it gets to that point. Otherwise, if we start pulling back going into Wednesday, I'm kind of aiming around that 54.69 mark here for support after this massive rally back, which is absurd. These are in weeks, so it has been for the yen carry trade. It has been just a matter of a couple of weeks that we've essentially rallied back. But it has been a higher low, like I stated. I did mark this previously here. I talk about a 42% market correction on average for a recession. So yeah, we could be potentially looking at a 3250. Not trying to fear monger here. There's a lot of important data that reflects that we are in a recession. I believe we're in a depression at this point once they actually finalize numbers. But with that being said, I think once we start pricing that in, now when we started to essentially rally back in 2022, we hit roughly around that 3,500. I kind of bring this up almost every time we've essentially come to this. You can see here, we hit roughly just under that 3,500 mark. This was when we started increasing rates rapidly. So we had a lot of Powell events, which gave us these big spikes down. And essentially, we started to rally, and then we started to retest back when we were continuing to increase rates. And then we paused right here. and then the market's essentially rallied since, which is normally typically what happens. And as you can see, even looking in the past, what printing of the money supply does, it makes these smaller moves much bigger. Brings a lot more volatility to the market, which is not a good thing, um, because you get more bigger crashes with the manipulation, as you can see. So we'll see what happens here. That's just on average. It's not saying we will hit that, but it could be a strong possibility, just considering that, again, we're seeing a lot of very historic levels we haven't seen in decades when it comes to recessionary debt to GDP. Like I just mentioned, there's a lot of different things here. So we're going to have to watch, but this week will definitely be important with what's going on with NVIDIA earnings. So like I said, I wouldn't be surprised if we at least pull back to this level. Again, if we do start selling off, I always go just the next kind of zone over. So I would probably say we at least pull back to 5,300 if it's a really bad earnings. Again, we will have to see. That will be the final nail in the coffin for this earnings, and then we'll have to wait till the next earnings. But we have a lot of other bigger events going on between now and then that could potentially start pushing this thing down even more. So we got to pay attention to that. So with that SPX done, we'll take a look at Bitcoin here. Bitcoin has been rallying again with no really bad news. Of course, everything's going to rally. The problem here with Bitcoin is it needs to break above the 63. If not, that's going to be a problem, or it could potentially come back in the zone. Like I stated before last week, I do believe we're going to see at least a 45 at some point when the market starts to correct. Again, we have to understand, I want to emphasize this, and I do talk about this. This is why I normally make these two videos into one, because it makes more sense as you're talking through some of these points. But ultimately, right now, what we need to understand is that the market in itself is heavily influenced on events. We all know that the debt-based system is essentially is never works out, and you have to understand that a lot of these things are being delayed, manipulated, and they wait for an actual event to occur. They have essentially all kind of pre-packaged, and then when it happens, they have the reasoning to why it happens, when in fact we've seen that there's been heavy manipulation to keep it propped up. But nonetheless, when the market corrects, everything will correct. It doesn't matter what market you're in. There's no way Bitcoin's just going to magically just break away from the economy. It's going to have the economy is going to have influence over what Bitcoin does. So, but if we do correct, I could see a 45, like I just stated with SPX. I could see us at least correcting potentially down to here. But even with a massive correction on what goes on, and we start heavily selling, I could potentially see us at least drop down to the 35. Before we get our actual true bull market. Once the printers and everything go on, that's kind of your sentiment that, hey, the market's going to rally back soon at some point. The economy will not. That's something you need to differentiate. The economy will not come back as quickly. This is why housing takes so long, but the markets can price this stuff in, and it will only take 2 to 3 months. So my point I was getting to was the fact that you'll have, because we've already been in this situation, a lot of these numbers are just now reflecting that. What you're going to see is essentially, this is how markets are so they can price in stuff so greatly, because again, it's only based off of headline news when I talk about these other things that are going on. So it'll correct. It'll only take about 2 to 3 months to correct, and then at that point, then it'll essentially turn around and start rallying at that point, and then you start getting better earnings. This is why I talk about a lot of these earnings, because right now you're still seeing really bad earnings. Until they start cutting, then you'll start seeing a lot of these stocks start to explode, because that initial things have started switching back around, will cause some massive push up, and then plus also you got money in the system and everything, which builds confidence back that things will start to rally. So you have to understand, on this dip, is you want to be buying on this dip, and this dip can go low. So just be mindful of that. So again, I think this could potentially reach down here, but ultimately this is our key level this week, is at 63K mark. If you can hold above that, again, our range being all-time high, roughly around that 75, is kind of what we're messing with. I wouldn't be surprised if we try to rally some, hit here, and they just can't break out to new all-time highs, or maybe we just wick and we come back down. Kind of still all held in this range. This is a very large range for crypto, but it is consolidating quite quickly. But again, I think to get a liquidation spike, kind of like this that we've seen here, this was again from the yen carry trade. I expect this thing to come down here to price in a recession and then back to all-time highs is what I'm thinking it could potentially do. Run past that, potentially even from that point. So let's take a look at bonds, because bonds will be important because we are starting to talk about cutting. Now, this is something I've talked about before. I need to probably actually clean this chart up. But ultimately, as of right now, I'm thinking that we could potentially aim for the 145 when we start cutting rates. Again, the size of the rates are going to matter with bonds. If they are only cutting 25 points, that's not going to do much for this. You may see a spike up to 110. Ultimately, if they start cutting at 50, 100, which eventually they're going to have to do. So if they don't do it in September, if they start doing it in November, that's telling you that there's very much a concern, especially with the revisions with all the job numbers, that they might start cutting quickly. And I think we could potentially see a spike up to 155. I don't think you're going to see this 180 like we did before. Again, we were in a really, those pandemic kinds of levels, right? You have to understand what was actually going on during that time. But we might, because of you have to understand too, is that you've put the consumer at such a bad spots that you almost have to start lowering rates almost back down to zero because of that. So we'll see, but I would only aim for probably around a 150 on the bonds. But you're consolidating. You have been consolidating for a long time, expecting this thing to potentially shoot up. You don't want this thing to really go lower because that's just a bad play for bonds in general. So, and then you have gold that's up at back at all-time highs. Again, this is a hedge against the concern of the uncertainty. So once the recession is priced in, I can see another big massive spike. You're in price discovery mode at this point, so you have to go over psychological numbers. So the 240 would be the next, 250, 260. You have to shoot those would be your zones you're kind of watching, but ultimately price discovery mode, you really can't control it. You have to let it build structure to be able to even build any kind of supply and demand. So you need to keep that aware, but you have to know how it moves. And as of right now, there's so much uncertainty. We've made all new all-time highs, and you haven't seen this in gold in a very, very long time. So again, these are things you need to all keep in consideration when you're looking at these charts. So with that being said, let's swing it on over to Tesla. Talked about Tesla and trying to break out here. It actually got pushed right back into here. We talked about this back when we were over here when we pushed out. We did the same thing down here. This is when essentially Elon started talking about FSD, and then delay in FSD put us right back in here. So expecting at least the next, maybe the remainder of the year, this thing just continues to chop down lower, especially if you start pricing in a recession. Expecting potentially another one of these where it may drop a little bit lower. And then get pushed right back into this wedge, and then expect a massive rally when FSD and everything. October is when FSD is as well. So I believe that's when it got delayed till. So when that news announcement, it could be what breaks this out. But ultimately, again, it's been rallying very quickly whenever there's any kind of recovery. So just keep that in mind. Out of everything else that's currently going on, Tesla has done very well. So really watching this wedge very closely. Kind of just expecting it to play this 231 range to this 200 range until we start getting some major news, maybe attempts to try to reblock or break out of here. But we need to really watch and see. Ultimately, right now, our ceiling is we're really kind of just bouncing between this 172 mark and this 258 mark. And when you're looking at the monthly basis here, so the monthly time frame here. So we'll see what happens. But like I said, ultimately, if we can break out of here, we could get a massive move up. But we're just kind of waiting for that whole price in the recession thing, and then kind of go from there. So again, Palantir still playing this channel. We'll see if it can break up back up over the 33 mark. If this starts selling off this week, expecting it to retest the bottom channel here. I really thought we would have broke it here with the yen carry trade, but this thing just got bought up quickly and pushed it right back up. So I think this can do extremely well in the future. But again, we have to price in a recession. So I don't know how far this thing is going to actually pull back. But once it starts going, it's really going to start going. So I don't think you'll see this level like you did back here before. you never know. I mean, given the recession and the historical data we currently have, it very well could. But again, very key point right here is just really seeing if we can hold above this channel and start to break out. Even if we do break out, typically it doesn't last very long, and then it still gets pulled back into to this channel. So we'll see, but very overextended right now. Massive candles every time we've touched that bottom range. So just keep that in mind. I expect this thing to do one more pullback to the 25, and then we'll see if we can hold that. If not, then yeah, we'll have to go from there. But ultimately, the fact that this thing just keeps going up is not something, not a typically normal move. So just keep that in mind. Amazon, watching this one. This one is a little weaker, so we'll have to see if this can still hold this 176 mark this week. If not, it's a higher low. We'll see if this thing tracks back down to the 146. Again, you're looking at higher time frame here. This is a weekly, so you'd have to assume that by the end of the week, if we can't hold this by the end of the week and we're back down here, that could be a big problem, especially with NVIDIA earnings. That will be important to watch. But we'll have to see. We'll have to see how that does play out. So watching that one, PayPal, I bring this one up all the time. I do really like PayPal. Is trying to break out of this range again. This 75 is really the key range. We're getting a lot of key ranges to the high side, so we want to make sure that we can break that. Otherwise, we'll try to retest back down here to 66. You want that to hold. If it can't, again, your new level is 58. These other higher time frames here, maybe looking at 94, maybe the next big range here. So if we can break this level, you could potentially even get a massive rally out of this if we can break this 75. But again, with not pricing anything in yet, I'm not really sure if that's plausible. Again, this is a higher time frame, so you can see the massive gap here. So it's more like probably your 72 up here range is where you're looking at. Anything near the 90, I'd be very cautious to try to hold on if you are just playing from range to range. But again, you want this thing to at least pull back to the 66 before taking position there. Celsius, one I've really been watching. I've been in and out of this. I've taken some profit on this massive little spike here, but it is consolidating nicely. I do really like this for the future. What could potentially be. So you've had some nice support currently right now, sitting at the 37. You have another support here sitting at the 28. So the lower this thing goes down, this is definitely a really solid buy. If you can get anything down here, if this falls in this range somehow, if we price in a recession and hits to 18, this one would definitely be a buy. But well, we'll have to watch and see. Let's not get ahead of ourselves and go from there. But ultimately, right now, you need it to hold this 36. If it breaks down below that, you're going to have a pretty deep dive, at least down to the 30 mark, and then we'll have to see what happens there. But again, it's got a lot of bad news, so let the bad news feed out, and then hopefully allow it to get a position after that. Let's take a look at NVIDIA. Since NVIDIA has earnings this week, flirting with all-time highs again, you want this thing to break above, a clean break above 133 on the weekly. So this week, I'm just kind of expecting this thing to consolidate, to be honest. And then, again, I gotta love these charts sometimes. But you're looking for it to hold above this. So again, there's a lot of chop in here. This is what I don't like about the NVIDIA chart, is it's very like choppy. But and a lot of these are on lower time frames, not the daily, so it may not look like it makes a lot of sense, but it makes more sense when you are looking at the daily. But as of right now, this is kind of our key level right here. So roughly around the 135, we need a breakout of that for us to really start making all-time highs. But again, this week will play heavily into that, so we'll have to see. Again, there's been delay in chips. For some reason they miss. This could definitely be a very worrying concern. You have to understand, again, they did a stock split for a reason. So if we start pulling back, kind of really looking at that 106 mark, And then again, you start pricing in a recession. We'll have to see how much this will actually go down, because I don't think it will go down until you have a bigger sediment, or in that they aren't gaining year over year growth, month over month growth isn't what it is right now. If you miss expectations or anything like that, this thing can really correct pretty massively. So kind of really watching that. And then let's take a look at SoFi. I've been SoFi up a lot. SoFi is kind of holding the support roughly at the 703. Has dipped down a couple different times. My biggest concern with this one being is that if we start pricing in a recession, how low can this get? Because we've gotten pretty low. You have to kind of really look at this level here. This was back in 2000. This is when the low of the market was back here in October, mid-October of 22. So this one I think could potentially get back to that level. If we start pricing a recession, you're going to get a massive correction on just the banks in itself. So I think you may see that potentially drop back down there. Not saying it can reclaim the 64. I think it's the earnings and stuff are doing fantastic, but ultimately right now we have to understand what is about ready to happen. Once we price this stuff in, I do believe there'll be a strong bull market. That's why I bring up a lot of these ones already, because I think they can be the first to churn and have some massive moves when they do. So just kind of watching it there. BA, this thing is a hunk of junk, but nonetheless, and still playing range. It's got this wider range, essentially from the 200 to the 164. Until the market gets an idea of a recession and what's going on, expect it to kind of just remain in this range. Once the market sentiment changes and it dictates if it goes up or down, I think this could potentially rally up to 22. If we get in a bull market, if we get in a bear market, I could see this thing again correcting back down to at least the 122 mark. A very strong possibility. It's been kind of holding the support at the 166. Expect that to break if we do start getting a bad sentiment in the market. But again, we'll have to see. Again, BA, I think, is heavily influenced right now what's just going on with the general market sentiment. And obviously, JP Morgan is going to look just like the market as well. As long as this is strong, we'll continue to push up. But once the market sentiment changes, again, your very key levels kind of in price discovery mode right now. So you really, again, psychological numbers for that. But you don't want it to break below the 198 mark. It needs to hold that. If it does break it, then your next level is sitting at the 180 mark roughly, and then potentially could get a massive sink down to the 155. But again, I think that is worst case scenario. You see 155 in a recession. You may not even see that. This is probably your lows back in October. So even though we do pricing in, I think this is the rolling recession a lot of people talk about, is the October of 22 is the bottom. Could very well be that time that we don't know if that's going to be the ultimate bottom or not. I still believe there might be another correction that could potentially happen, but we're going to have to see when we're pricing a recession. That doesn't come till the rate cuts. You have to understand when the rate cuts are applied, that all your other numbers and your indicators are going to start accelerating at a rapid rate. And so even though we've had massive revisions to unemployment numbers, they're going to accelerate even more now, because we still haven't even cut yet. So they're going to get way worse real quickly. And then we start cutting, it's going to take about 4 to 6 months, potentially a year from that point, for us to really see the impact of those rate cuts. So you're going to get worse data before it gets better, if that makes sense. But again, the market will price that in. Again, once that's actually officially announced that we are rate cutting and then doing rapid rate cuts, that'll take about 2 to 3 months. And then just kind of like we saw in October and that 22, when they were increasing rates. At that point, it was really choppy and nasty for a couple months, and that's what we're kind of expecting. And then the market will turn from that point. So with all that being said, if you have made it this far, I do appreciate you. Go ahead and drop a like, and I will see you guys on the next one.